Okay, let's get right into it. Right now, in the third quarter of 2025, we are seeing a massive turning point for artificial intelligence in South America. Seriously, the whole conversation has changed. We've moved beyond just talking about what AI could do, and we're now deep in the hard work of making it actually happen. This is a whole new era. And we're calling this the AI execution era. This isn't just some buzzword. It's the moment that AI stops being this far-off, futuristic idea and starts becoming the basic plumbing, the foundational infrastructure for the entire economy. The hype is over. This is the age of getting things done. So, what's really driving this shift from just dreaming to actually building? Well, it boils down to two huge technical leaps. First, compared to just a couple of years ago, AI models can now handle context windows that are a whopping 30 times larger. And second, the cost to actually run these models, the inference cost, has absolutely plummeted by over 80%. That's a game changer. It makes sophisticated AI accessible to pretty much everyone. But, and this is a big but, this is where the story gets really complicated. Because South America is a region of deep, deep paradoxes. For every incredible step forward with AI, the continent seems to face a huge, often contradictory challenge that's holding it back. And there's no better example of this than Argentina. Just look at this contrast. On one hand, you have this absolutely booming private tech sector, which is on track to more than double in size by 2028. But at the exact same time, public funding for science and technology has completely collapsed to its lowest level in over 20 years. And this quote? Wow. It really puts a human face on those numbers. The dean here isn't framing this as just a simple budget cut. He's calling it what he sees it as, a deliberate political choice to dismantle the country's entire scientific foundation. Which leads us directly to the second major paradox, something we're calling the talent chasm. You've got this massive build-out of digital infrastructure happening everywhere, but it's running headfirst into a critical problem. There just aren't enough skilled people to design, build, and run it all. And this isn't just a feeling people have. The numbers are really stark. In Colombia, a staggering 68%. That's more than 2/3 of IT employers say they have a hard time finding qualified talent. Let's be clear. This skills gap is the single biggest bottleneck to AI growth across the entire continent. Period. So, with all this going on, how are different countries actually responding? Well, it turns out every nation is forging its own unique path. So let's take a look at 4 key countries and see how they're trying to navigate these incredible opportunities and, these pretty immense challenges. Okay, when it comes to rules and regulations, you can see a pretty clear trend emerging. Most of these countries are moving towards comprehensive, risk-based laws, a lot like the EU's AI Act. But here's the catch for any business trying to operate there. This creates a really complex and fragmented patchwork of different laws, which is a huge compliance headache. Now, if you look closely at Colombia, you see a really deliberate, step-by-step strategy taking shape. They're not just winging it. They started with a national policy, then they followed up with specific legislation, and they grounded the whole thing in international guidelines from UNESCO. They are methodically trying to position themselves as a regional leader in ethical AI governance. So you can almost frame the entire region as this one fascinating, large-scale experiment. On one side, you've got countries like Brazil and Colombia going with a state-led, top-down model with massive public investment. And on the other, you have Argentina's almost unintentional experiment in pure market-led innovation, where the private sector is basically left to drive everything. The long-term consequences of these two different paths are going to be profound. All right, let's follow the money. Where is all this investment and technology actually flowing? How is AI fundamentally changing the core industries of South America's economy? If you look at where venture capital is going, there's a very clear pecking order. Fintech is still the undisputed king, no question. It attracts the most cash. But right behind it, we're seeing this powerful comeback in AgriTech, especially with a focus on sustainability, and a steady climb in HealthTech, which many see as the next major frontier for growth. And where these sectors overlap, something really interesting is emerging: agro-fintech. The core idea is simple, but it's incredibly powerful. You take all this massive amount of data from AgriTech platforms, think soil sensors, satellite imagery, and you feed it to fintech companies. They use it to accurately price risk for farmers, finally unlocking the credit and insurance that so many of them have struggled to get for years. And this isn't just theory. It's already having a major impact on people's lives. Just take the noharm.ai project in Brazil. It's being used in remote communities to double-check for prescription errors. And in its first rollout, it has already quadrupled the capacity of local pharmacists. It's literally preventing dangerous medication mistakes in really underserved areas. Now, of course, none of this software, none of these apps can exist without a physical foundation to run on. And that digital backbone is being built right now by global tech giants who are making a massive bet on the region's digital future. And when I say massive, I mean it. Check out this number, $2.7 billion. That represents Microsoft's commitment to expand its cloud and AI infrastructure in Brazil alone. It is the single largest investment in the company's 35-year history in the country. And it is not just one company. Amazon Web Services is going after a broad, continent-wide strategy. They're building a huge new 3-data center region in Chile and rolling out what they call local zones in pretty much every major city to provide super-fast, low-latency services. They're going everywhere. But here's the real secret to these so-called cloud wars. The main fight isn't really over who has the cheapest prices. No, it's a much more strategic battle to train and capture the loyalty of the next generation of developers. See, these companies know that building shiny data centers is useless if nobody knows how to use them. So their huge investments in training are really about creating the very market that they plan to serve down the line. So as we pull all this together and look ahead to 2026, we can really boil everything down to a few core challenges. And these are the things that will ultimately determine whether the region succeeds or fails in this new AI era. It really comes down to 4 major hurdles. We've already talked about the talent chasm and the headaches from regulatory fragmentation. But we also have to deal with a persistent digital divide that leaves millions of people behind, and something the World Bank calls the innovation paradox. And this innovation paradox becomes crystal clear when you look at spending on R&D. The chart tells the whole story. Despite all the potential, the region invests just 0.62% of its GDP in research and development. That is 4 times less than the global average. It's a critical underinvestment that really handicaps long-term innovation. Which leaves us with the most important question of all. The multi-billion-dollar infrastructure is being built. The AI models are ready to go. The digital future is arriving right now. But will South America find, train, and, just as importantly, retain the talent that's needed to actually run it?